Hello and welcome back to Dukascopy TV. It gives me great pleasure now to welcome into the studio Thierry Cottet, CIO at Merrill Lynch, to discuss their quarterly CIO survey. Thierry, thank you very much for coming into the studio today.
Thank you.
Now, what are the main market drivers at present?
We see basically today three main drivers. That would be growth, policy and politics. On the growth, we see a muted growth so far. The situation is a lot better in the US, but elsewhere we are also seeing some signs of stabilization. And going forward, we believe this slow healing process to continue. On the policy, the European Central Bank and the US Fed have taken steps to reduce the systemic risk. And going forward, we expect central banks globally to continue to ease their monetary policy to various degrees. And finally, on the political side, we have, of course, the presidential election in the US, but more importantly, the discussion around the fiscal cliff. In Europe, the politicians will continue to work towards a gradual European integration. But those political aspects do have the potential to derail the recovery. And not later than a couple of weeks back, the IMF warned that we could be heading for a global recession if there is no compromise to be found on the fiscal cliff, and if Europe continues to work on the program exclusively driven by austerity.
You mentioned their central bank. Has central bank measures in Q3 really changed sort of growth forecasts?
Yes, the fundamentals have not changed much because, of course, these measures are not solving all the problems, but still we see that the systemic risk has been reduced, and that works very much in a direction to enable the political system or the economic system to better withstand shocks going forward, and that is positive for growth.
Despite this, there's still been a spike in equities. Are you more positive, therefore, in the equities markets?
Indeed, we had an impressive performance of equities year to date. And actually, for the S&P, we are quite close to our target. Nevertheless, we are still positive on selected equities for a number of reasons. The first is that valuation is attractive, where two pessimistic scenarios have been priced in. We also see that the lower risk and abundant liquidity are favorable to equities. The balance sheets are in good shape compared to before the crisis. There has been lots of deleveraging, lots of cost cutting, and there are abundant cash also in the balance sheet, which could be put to work towards growth. And finally, we are also seeing a future of lower production costs. For instance, labor cost is quite reasonable due to the unemployment rate. The financing costs are low due to low interest rates. And at least in the US, we are going to head for a period of cheaper energy price due to shale gas extraction.
What asset allocation position does Merrill Lynch advocate then?
In our asset allocation, we are cautiously optimistic. For the time being, we do have a slight overweight in risk, due mainly to the exposure of credit compared to government bonds. And going forward, we are going to increase our exposure to equity from neutral currently to overweight in equities. In the equity space, we continue to prefer, just like the whole year, quality, high income equities, but we are also going into the direction of quality companies which are in the position to grow their dividends. In the space of developed markets against emerging markets, For the time being, we prefer developed markets, but over time, we're going to turn towards emerging markets and pursue one of our secular theme, which is the middle class consumer. And we also have implemented a risk hedge in the form of assets which are uncorrelated to equities.
We've discussed Europe and the US a lot, and how does all of this play out on your projections for the euro-US dollar?
We expect the US dollar to appreciate against the major currencies, even against the euro towards the end of the year. As for the euro, we are also expecting some increase in the euro, but not substantially, because again, so far the ECB measures have not solved the problem. So the problems are not yet solved, and for this reason, we do not expect lots of upside potential for the euro.
Thierry, many thanks for your insights there.
Thank you.
We'll be back shortly with more exclusive interviews. For now, though, goodbye.